Good morning, traders. Welcome to StockCast. My name is Todd Derby, your host, along with co-host James Mason. Our goal every day is to bring you insights and ideas to your daily trading activities. And today, we've got two good ones. Good morning, James. How are you doing?
Todd, good morning. I'm doing well. How are you?
Doing well.
All right. Looks like we have a little excitement in the market today. Pre-market, at least.
Absolutely.
Like, man, it's starting to look like penny stock season is opening up, and it is about time. Because really, we started the show when penny stock season was wrapping up, and we started. This whole StockCast series. We started in the very beginning. In March, I believe.
Yeah.
Okay, yeah. So penny stock season was wrapping up. People were about ready to start going on summer vacations and whatnot. And we came out the gates just saying that, hey, volume's going to pull back. Penny stock season is wrapping up. Things are going to be slow. And it is actually just drug its feet longer than what I expected. Usually it starts to open up in August, late August. And September is usually full-blown penny stock runners. We just have a late blossomer this year, I guess. So here we are in October. Things are starting to run. But, hey, that's all we care about. We care about making money, and that's it, actually.
We care about more. We care about puppy dogs and little babies also, but we do enjoy making money and taking care of our families and et cetera, et cetera.
Yeah. All right. So let's go ahead and let's talk about Funware, ticker PHUN. Let me share my screen.
Not one comment about us starting on time today.
I know, right?
I know that's the expected, but you'd think there'd be at least one like, wow, they're early.
Yeah, you think people would be like, Todd, James, congratulations.
Yeah, but if they don't care, then we can just start whatever damn time we want then.
Exactly. All right. Let's look at the daily chart on Funware. So Funware, ticker PHUN. This one we've pretty much been riding for actually just a little bit longer than the predictive oncology trade. And it finally paid off today. Now, I did cut this on September 29th because that was the day that I went all in on predictive oncology. They were aggravating the crap out of me by letting it drop under $1, and it was just kind of like, what the heck, guys? Like, what are you guys doing? But they locked down this deal. I'm sure everybody probably thinks that is why it's running today the way it is. But it's actually running based off of speculation that former President Trump is kind of affiliated with this company.
Kind of.
Well, actually, his former campaign, Funware, actually helped develop their website and their app for it. So they're kind of in bed together. And the catalyst finally paid off on this one. Again, I wasn't in this, but I didn't jump out of it because I felt bad about it. I just jumped out of it because I wanted to go all in on predictive oncology, since that's where I see the greatest potential for value. And I didn't want to miss that boat. But, heck, Funware has been all over the place. PHUN fun hasn't been fun until this morning. But that's how these penny stock catalyst trades go.
Yeah.
That's just how it is. You'll see everybody excited when I first alert one of these things. Everybody's excited. They're talking about how this is going to be a good trade. They're already thinking about how much money they're going to make, and they're already cashing checks. And then a week into it, they're already tired of waiting. And then a month into it, you have people selling off. 3 months into it, it just turns into this whole quicksand effect with traders. That's retail traders for you. And trust me, on our end, it's aggravating because we have to hear this shit all the time. All the time. We preach patience and scaling in. And this is why. If a lot of you remember, a few months back, I made some posts between the TT group on Facebook and in the Weeble Rockets group. And I basically said that it only takes about 4 or 5 trades a year to really make a lot of money. That's pretty much, the gist of it. And this is what I'm talking about. If you know what you're looking for, and if you just have patience, this crap pays off in time. Like, I don't know how many times I have to prove this crap over and over and over. I mean, you would think people would just be like, I understand now, but they don't. But whatever. So here we are. Let's see. Yesterday, during the open market, Funware started making a nice push up, but the action did not happen until after hours and pre-market this morning, when we hit a high of $7.35, I believe. Okay, so just
$7.35.
Okay, $7.35. And I mean, if we scroll out of the map, that would be basically right in this range, right in here. I'm just going to put a line there, and we'll change it to this teal color. If you had to wait 7 months to make profits like this, from down in this range, whatever it may be, even, let's see, I learned this thing back in March. So we'll even go right here. If you had to wait from March to October to make profits like this, so wrong thing. So roughly a little over 300%. Is it worth it? Absolutely.
Yeah.
Hey, baby.
Most people are paying financial advisors to earn 12% a year or 8% a year. So
Okay. Hold on. Ilana delivered me breakfast. I gotta give her fair share.
Her tax. She brings you breakfast and demands a tax.
Yeah, exactly. I didn't even have it in my hand yet, and she's already doing sign language for me to give her food. Bye, baby. I love you.
Yeah, it's not real sign language, people. It's a fist pounding on the table saying, now.
Exactly. All right. So, yeah, is it worth it for 300%? I mean, and again, guys, this is now hindsight. Hindsight's always 20/20. Because we don't ever know what something will truly run up to. We can only chart something out and give the best estimations. But I mean, hell, even with 100%, is it worth it? Absolutely. Absolutely. What a lot of retail traders fail to realize is most retail traders do not last longer than 3 to 4 months doing this, and their accounts are blown up. So if you're slowly scaling into something that has potential based off of a true catalyst, that's where you can make your money. I mean, I'm just saying, like, I've been preaching this forever, but few people grasp it. And I can't wrap my mind around that. Why only a few people want to grasp it, and others choose to think it's everyone else. So that is Funware. Me personally, if I was in this thing today, I'd be getting out.
It's a short candidate today.
Absolutely. A lot of people can be looking to short this. This is a perfect setup for a bear. A gap up on the daily chart, about that much. They're going to try to do their best to bring it down. So just keep that in mind, guys. It's okay to take profits. And for the people who have over 200, 300% in profits, who are just like, you know what, I'm going to keep holding on to this. What are you holding on for? Like, seriously, like, what are you holding on for? Do you not like to make money? And I know a lot of those people will be like, well, yeah, I like to make money. That's why I'm holding on to it, to make more money. You don't know that. Nobody knows that. You don't know when some deep pockets are going to come in and short this thing with 5 million shares. You don't know that.
Yeah, cover your initial capital investment. Put a trailing stop loss. Put a range order on. Do something to protect yourself, because we don't want to hear 2 weeks later or Monday or Tuesday like, oh my gosh, I gave it all back.
It happened with APOP. You know, when APOP took off running back in March of this year, I mean, it was a 300% gainer. 90% of us were out of it, but then there was about 10% who held on to it, and it literally went right back down to where we started. And I'm just like, why are you guys still holding on to it? And a lot of people didn't even sell any shares. That blows my mind. I just can't wrap my mind around it. So for people who are still trying to hold on, I don't understand why, but hell, at least put a damn stop loss in somewhere. If you don't even know where, just close your eyes, point at your chart, and just say stop loss right here, wherever it's at. I don't know. I mean, at least have a stop loss in somewhere to take profits. All right, so that is Funware, ticker PHUN. Now let's talk about the market darling, ticker DWAC. So the Bears got destroyed yesterday. Billions of dollars are lost. This ticker should not have even ran up past $31. As you can see, that before this was ever going to merge with former President Trump's social media platform, this thing really only had a high of just shy of $27. Now, I came up with the target price in the more beginning part of the day yesterday of $30.82. And that was just based off of the daily chart Bollinger Band lines, which were obviously different at that point. And you can see right here where that range was about. But this only ran up because of short squeezes. There's nothing else to it. Short squeezes, that's it. There's nothing fundamentally driving this thing. Former President Trump's website, his social media platform app is not even fully developed. Right now, it's just an idea. So I'm not saying that this thing won't have significant value in the future. I believe it absolutely will, but it's not worth $92 a share right now. Now, we all know that the stock market doesn't necessarily go off fundamentals anymore, and that is just the way it is. But again, guys, I'm telling you, all this stuff right here, that all happened off of short squeezes. There were so many people trying to short this thing because it fundamentally just didn't make sense. It was way overextended right down here under 31. I mean, this thing really should have dropped down to the low 20s and then bled after that. But when you have billions of dollars of bearish money getting squeezed out of the market, that obviously causes that push up on top of FOMO and people going long on it. And it creates a black swan. And that's what we have at this point. Now, I'm extremely bearish leaning on this thing at this point. So hold on, let me back up a second. So I alerted yesterday to our Twitter followers, our private Twitter followers for the TTBB. And I actually said that if it held above $45 into pre-market, then my target price would be $76. Well, last night after hours, I mean, heck, we almost touched it. We hit a more after hours high of 74.40. And then pre-market today, right out the gates, the market makers shot up. And this is probably just some accounts blowing up or people covering their short positions right here. And then obviously some profit takers, which can't blame them. And then here we're breaking pre-market highs once again. Or we broke it back here, but we're testing it once again right here currently. Now, I only called 76 because, well, there's no point of me trying to explain the math on it, my thought process. But I felt that 76 was still a long shot. But apparently we still had a strong squeeze going on. And here we are at this point. So while I am bearish leaning on this at this point, that doesn't mean I'm going to jump in today trying to attack this thing short. I just have a hard time seeing the value of this ticker right here being this range. And it's not that I don't think that it can go up anymore. That's actually what concerns me, is the potential that how much it could go up with the FOMO and more short squeezes. But at some point, when this thing starts to break down, it's going to break down and crush people the same way that GameStop did, that AMC did, and all of these other pump and dumps. So it's really hard for me to give like a short bearish range on this thing. There's so much bullish momentum. There's so many bears getting squeezed out. And I ain't trying to get my peaches squeezed here. You know what I'm saying? All right. So Johnny, thank you for the tip. Let's see. Todd, do you have anything else to say about this one?
No, it's going to be interesting to watch it today. I'm going to have my eyes on it. I may try to take a small position and a small position, waiting for the indicators to line up and make a couple dollars.
All right. Let's see.
We're under 10 minutes to less than 10 minutes to the start of the market.
Yeah. S. John, have fun driving up to Pensacola. I love Pensacola. Between Pensacola and Destin, my two favorite beaches. All right. So just running through the comments really quickly. Brian Latchford. Hold on. I got to marquee this one. This is so true. I hear this crap all the time. Brian Latchford, he's spot on because he has seen this. Me and Brian, we talk pretty often. He has seen this so many times with my call outs. At first, everybody's stoked about them. And then, like he says, 3 months into it, James sucks. 4 months into it, James is right. And it's not that I'm trying to be like, hey, everybody, look at how right I am. It's the fact of all these people they just don't have any patience. They expect instant gratification. And hey, it's their money. But damn, I mean, just because y'all make badass entries doesn't mean it's a shit ass trade that I called out. It's on y'all. Or just because y'all decided to jump out of the trade before it took off running, it doesn't mean it was a bad call out for me. Let's see.
Aaron, thank you for the tip.
Oh yeah, Aaron, thank you. So Jason Lamberson, my thoughts on PHUN today. I believe
going
it's
down.
going to probably top out somewhere right in here, right around the bell, and then the bears will be all over it. So, alrighty, guys. So, Curtis James, thank you for the tip. So, other than that, it is Friday. Let's wrap this week up. Let's make a good week here. Jonathan Walker, thank you for the other tip.
Wow, thanks, Jonathan.
But all right, guys, it's Friday. Let's wrap up a good solid trading week, and just don't screw it up. Nothing worse than having a crappy weekend for doing dumb shit. Trust me, I've been down that road plenty of times. All right, guys. So take care, trade safe, trade smart, and we will catch you all in the next one.